What if everything Elon Musk has built, every rocket, every car, every robot, every satellite, was always meant to become one company? Most people see SpaceX and Tesla as two separate businesses. One builds rockets, one builds electric cars. Different industries, different customers, different stock tickers. But if you look at what has been happening between these two companies over the last 12 months, the money flowing, the deals being signed, the mergers already completed, and the infrastructure being built, a completely different picture starts to emerge. A picture that looks less like two companies making occasional partnerships, and more like two halves of a single machine that has been quietly assembling itself for years. This story starts with a number, 573 million. That is the total value of transactions that flowed between Tesla and Elon Musk's other companies, primarily SpaceX and xAI, in the single year of 2025. Tesla sold $430 million worth of Megapack energy storage units to xAI to power its AI data centers. Tesla sold $143 million worth of Cybertrucks to SpaceX, including 1,179 Cybertrucks in a single quarter, 18% of all U.S. Cybertruck registrations that quarter. SpaceX paid Tesla $11.4 million under commercial and licensing agreements. Every one of these transactions was disclosed in Tesla's official SEC filing. The companies are not just philosophically aligned under the same CEO. They are financially intertwined in ways that are growing faster every year. And the $573 million number does not even include what happened next. In January 2026, Tesla announced it was investing $2 billion in xAI's Series E funding round. The Tesla board presented it to shareholders as an investment in an artificial intelligence company. Then, in February 2026, SpaceX acquired xAI in a mega merger that folded Musk's AI platform, the Grok chatbot, the X social media platform, and all of xAI's data center infrastructure under the SpaceX corporate umbrella. The Tesla shareholders who had voted to invest $2 billion in an AI company woke up in March 2026 to find they now owned a minority stake in a rocket company instead. They had invested in xAI. They got SpaceX shares. No second vote, no separate approval. The corporate structure had simply been reorganized around them. This is not the first time Musk has done something like this. In 2016, he merged SolarCity, a solar energy company run by his cousins, into Tesla, despite vocal opposition from Tesla shareholders who viewed it as a bailout. In March 2025, an xAI acquired X, the social media platform formerly known as Twitter. In February 2026, xAI merged into SpaceX. Every one of these moves followed the same pattern. A collection of separate companies with overlapping missions, overlapping customers, and overlapping infrastructure suddenly becomes a single corporate entity. Musk has been practicing the roll-up strategy on smaller companies for years. And now, for the first time, the question is being asked about the two biggest ones. Is Tesla next? The financial case for a merger is being made by some of the most respected analysts in the industry. Wedbush Securities, one of the most consistently bullish Tesla analyst firms on Wall Street, said there is a growing chance that Tesla will eventually be merged in some form into the combined SpaceX and xAI entity. Wedbush analyst Dan Ives described the holy grail as combining SpaceX and Tesla over the next 12 to 18 months, bringing together what he called the connected tissue between both disruptive tech stalwarts looking to lead the AI revolution. Motley Fool analyst David Jagelski published a formal prediction that Musk will merge Tesla with SpaceX within 5 years, citing the Terafab semiconductor fabrication plant currently under construction in Austin, Texas, as the first tangible infrastructure step in that direction. Terafab is a joint project between Tesla and SpaceX, a massive chip fabrication facility that will supply custom silicon to both companies. You do not build a shared chip factory with a partner you are planning to keep at arm's length. Walter Isaacson, Musk's official biographer and one of the few people who has spent hundreds of hours in direct conversation with him, went on CNBC in April 2026 and said flatly that he believes Tesla and SpaceX will eventually merge. Isaacson pointed specifically to Terafab as evidence of deepening operational ties that he expects to continue growing. He also told investors something that reframes how to think about either company individually. You are not investing in Tesla or SpaceX as standalone businesses. You are investing in Elon Musk, and Elon Musk is building one thing. Chamath Palihapitiya, the venture capitalist known as the SPAC king for his record of identifying corporate restructuring plays before they happen, made an even more direct prediction on his podcast in April 2026. He said he does not believe SpaceX will do a traditional IPO at all. His prediction is that SpaceX will instead execute a reverse merger into Tesla, using the public Tesla stock as the vehicle to bring SpaceX to public markets while simultaneously consolidating Musk's control over both companies under a single cap table. In a reverse merger, SpaceX shareholders would receive Tesla stock. Musk, who owns a much larger percentage of SpaceX than he does of Tesla, would see that ownership converted into additional Tesla shares, dramatically increasing his control over the combined entity. The math works for him personally in a way that a separate SpaceX IPO does not. The valuation case is extraordinary. SpaceX was reportedly targeting a valuation of approximately $1.75 trillion in a potential standalone IPO as of mid-2026. Tesla's market capitalization has been hovering around $1.5 trillion. A combined Tesla-SpaceX entity would be valued in the range of $2.6 trillion to $3 trillion, placing it comfortably among the 2 or 3 most valuable companies on Earth. Betting markets as of late January 2026 assigned a 15% probability to a Tesla-SpaceX merger completing by mid-year and a 48% probability to the SpaceX-XAI combination, which has since been completed. The XAI merger was the appetizer. The Tesla question is the main course. The operational logic of a merger is harder to dismiss than the financial logic. Consider what the combined company would look like in practice. SpaceX builds Starship, the largest rocket ever constructed, which Musk has explicitly stated will be used to transport Tesla's Optimus humanoid robots to the moon and to Mars. Optimus robots built by Tesla are scheduled to be among the first payloads on uncrewed Starship missions to set up lunar and Martian bases. Tesla's Megapack energy storage systems are being sold to power xAI's data centers, which are now SpaceX's data centers after the February merger. Tesla's Dojo supercomputer and xAI's Grok model are both working on AI training problems that directly apply to SpaceX's autonomous flight systems, autonomous Optimus robot control, and the autonomous navigation systems that a future Mars colony will depend on entirely. Starlink, SpaceX's satellite internet constellation, provides the connectivity backbone for Tesla's robotaxi network, full self-driving updates, and Optimus robot telemetry. Every product in the portfolio connects to every other product. The only thing making them look like separate companies is that they have different names on different stock tickers. Musk himself has described the integrated vision explicitly. In a March 2026 post on X, he described Grok as the master conductor and navigator directing a digital Optimus robot, processing and acting on real-time information from the world. The image he painted was not of an AI chatbot living in a phone app. It was a fully integrated system where artificial intelligence, physical robotics, space transportation, satellite connectivity, and energy storage all operate as a single coherent machine. When Musk describes that vision in public, he is not talking about a software product or a car company. He is describing a civilization-scale operating system and the legal corporate structure in which that system lives is currently split across multiple entities only because the mergers have not all been completed yet. The obstacles to a Tesla-SpaceX merger are real and should not be dismissed. Antitrust scrutiny is the most significant. Combining the world's most valuable private company with one of the world's most valuable public companies, both controlled by the same individual, would trigger regulatory review in the United States, the European Union, and potentially a dozen other jurisdictions. Tesla shareholders who do not share Musk's personal financial incentives in the deal would likely challenge the valuation methodology used to determine how many Tesla shares each SpaceX share is worth. Institutional investors in SpaceX, pension funds, sovereign wealth funds, and private equity firms that hold SpaceX shares specifically for the clean, standalone rocket and satellite story may prefer a traditional IPO that gives them liquidity at a known valuation, rather than a merger that ties their returns to Tesla's stock price and the political risks that now travel with Musk's public profile. Tesla's stock performance is itself a complicating factor. Through the first 4 months of 2026, Tesla shares were down nearly 15% year-to-date against a general market recovery. Vehicle sales have faced mounting pressure from Chinese electric vehicle manufacturers, whose cost structures allow them to undercut Tesla's prices in every major market outside North America. The Cybertruck has been both a cultural phenomenon and an operational liability, with numerous recalls and performance issues that have complicated the vehicle's reputation. Merging a rocket company with a car company that is facing competitive headwinds in its core business requires a compelling story for why the sum is greater than the parts. And that story is not self-evident to every institutional investor who would need to approve the deal. But there is a final argument for the merger that goes beyond the financial modeling and the antitrust risk and the shareholder votes. It is the argument that Musk himself implicitly makes every time he describes what he is building. He's not building a car company. He's not building a rocket company. He's not building a social media platform or an AI chatbot or an energy storage business. He is building the industrial infrastructure for a multi-planetary species. Every company in his portfolio exists to serve that goal. Tesla provides the robots and the energy systems. SpaceX provides the transportation. Starlink provides the communications. xAI provides the intelligence. The Boring Company provides tunneling and logistics. Neuralink provides the human-machine interface for the far future. None of those things make sense as separate, maximally profitable, standalone businesses optimized for quarterly earnings reports. They make sense as a single integrated system, building toward a single integrated goal. And if that is what they really are, if Musk's corporate empire is truly one company divided across multiple legal entities by historical accident and capital structure convenience, then a merger between Tesla and SpaceX is not a bold strategic move. It is simply the paperwork catching up to the reality that already exists. The question is not whether Elon Musk's Endgame is a single company. The question is what he is waiting for. And looking at the pace of mergers completed in the last 18 months, the answer might be not much longer. There's a detail buried inside Tesla's May 2026 SEC filing that most financial journalists covered only briefly, but that tells the whole story in a single sentence. Tesla shareholders voted in early 2026 to approve a $2 billion investment in xAI, an AI company. By the time the investment was completed on March 12, 2026, xAI no longer existed as an independent entity. SpaceX had absorbed it. Tesla shareholders did not vote to buy SpaceX shares. They voted to invest in AI. The corporate structure moved faster than the disclosure requirements. And when the dust settled, ordinary Tesla investors found themselves holding a small piece of the world's most valuable private rocket company without ever being asked if that was what they wanted. That sequence of events is not illegal. It is not even particularly unusual in the world of complex corporate restructuring, but it is revealing. It shows the speed at which Musk is willing to reorganize his corporate empire when the strategic moment arrives. It shows that the xAI SpaceX merger was not the end of the consolidation process. It was a step within it. And it shows that the governance boundaries between Tesla and SpaceX are already considerably more porous than the separate stock tickers suggest. Gene Munster, managing partner at Deepwater Asset Management and one of the most closely followed technology analysts on Wall Street, said in a February 2026 interview that Tesla shareholders would welcome a combination with SpaceX. His reasoning was direct. Bringing robotics and space together with AI sitting at the center creates not just a good investor story, but real operational substance. The companies are already doing the work together. The question is whether the legal structure eventually reflects that reality. Wedbush's Dan Ives put a 12 to 18 month timeline on the question. That window opened in February 2026. If Ives is right, the answer arrives before the end of 2027. And by that point, the company that results from the merger, if it happens, would not just be the most valuable company in the world. It would be something genuinely new. A publicly traded conglomerate whose products include electric cars, humanoid robots, orbital rockets, satellite internet, artificial intelligence, and a plan to put 1 million people on Mars. Nothing like that has ever traded on a stock exchange before. But then again, nothing Elon Musk has built has ever existed before either. That is arguably the whole point. There is one more angle to this story that almost nobody is talking about, and it may be the most important one. Elon Musk's personal stake in SpaceX is significantly larger than his personal stake in Tesla. He owns roughly 42% of SpaceX. He owns approximately 13% of Tesla. In a stock-for-stock merger where SpaceX shareholders receive Tesla stock at an agreed exchange ratio, Musk's SpaceX shares would convert into an enormous block of Tesla equity, potentially pushing his Tesla ownership from 13% to well above 30%. He would gain massive personal financial benefit from a deal that puts him more firmly in control of the combined company than he has ever been of either company individually. His shareholders would vote on the deal, but he would be the primary beneficiary of the outcome.